Perfect. All right. Welcome, everyone. Thank you for joining today. We are happy to have you here and appreciate you taking the time to join this talk. Before we begin, let's take a moment to reflect on the land that we are on and its history. We acknowledge that the land that we are meeting on today is the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat peoples, and is now home to many diverse First Nations, Inuit, and Métis peoples. We are most grateful and respectful for the use of this land. It is my pleasure to introduce our speaker for today's session, Prerna Mishra, Assistant Professor, Finance, Bowling Green State University. Today's talk is focused on when insurance schemes coexist, evidence from India's yield and weather index corp insurance programs. We will discover that when public insurance instruments coexist, participation dynamics reflect not only farmer learning, but also institutional design, fiscal incentives, and climate conditions. Thank you for joining today, Prerna. We're excited to learn from your work. Please take it away.
Thank you, Vishaka, for that introduction, and thanks to everyone who is present in this meeting for making the time on a Wednesday afternoon. I will share my screen and then we can get started. So I hope you can see my PDF. If everyone can see my PDF, then I can get going. Can you? Okay. Well, I'm assuming people can hear and see my screen, so I can get
We're all
going, I
good.
think.
Yeah.
Okay, yeah. So as Vishaka introduced me, I'm an assistant professor in the finance and accounting department at the Bowling Green State University. My research focus a lot on risk management and insurance. I just finished my PhD last fall at the Georgia State University in their risk management and insurance program. So this work is fairly recent, which is why I appreciate all of you making time to come here so that I could gain some thoughts and insights as to what you all think about this project. But it draws from my native country. I'm originally from India, and it draws from the crop insurance programs that exist there. That is the whole set. So, without further ado, I'll just get started. So, as is true for many countries in the world, and agriculture employs a lot of people. According to an International Labour Organization survey, globally in 2024, it employed about 1 billion, which is equal about 20%, 28% of the workforce. Over time, society has undergone changes. We have had technological advances, so maybe agricultural jobs have gone down, but still the sector remains central to economic development, food security, and is extremely important for rural livelihoods, especially in countries like India, where rural livelihood is very strongly dependent on agriculture. The problem is it is also highly exposed to climatic shocks like droughts, floods, heat waves, sea level rise, etc. All these things will dramatically affect agricultural output, which affects the livelihoods of farmers and also affects our food security now. Whether or not climate change is a reality, whether people or countries believe it or not in it or not is a different story, but the fact that it is affecting many countries in terms of their agricultural output, especially countries like India, is undeniable at this point. So because of these risks that exist to a very strong sector like agriculture, crop insurance becomes a very important risk transfer mechanism to stabilize agricultural production and also to sort of stabilize rural livelihoods. The problem is that it's not so easy to have a private insurance market for insuring agricultural risks, mainly because a lot of times they're very systemic in nature. And a lot of, as we know from our, introduction to risk management classes, any risk that becomes systemic, it becomes very hard for the private markets to insure it, mainly because a big area is affected simultaneously. And because of that, the insurers may get hit with losses and therefore claims all at large claims at the same time. As is true for any insurance, it agricultural or crop insurance also suffers from adverse selection and molecular hazard problems. And in countries of the size of, say, Canada or India, it's very difficult to monitor farmer behavior because of just the sheer number of people who are involved in this occupation and also the sheer size of farmlands. Of course, there is very high transaction costs as well that are involved with any insurance transaction, when something as simple as auto insurance or health insurance, right? So this is where governments can come in, because if the risk is systemic in nature, then it's often better for the governments to intervene. So they can help by supporting insurance provision. They can also be helpful in providing weather and agricultural data, because since, at least in context of India, agriculture is mostly performed in rural areas, most of those people are either not informed enough or not educated enough, or do not have the tools to constantly monitor weather. Even something as simple as like a weather app on their smartphone, this is not something that is very easily available to people in the rural areas. The other things that governments can help in is farmer awareness and adoption. So there is a world in which insurance schemes exist, but then there is this information that goes out to the people who need it, and it's often not so easy to disperse these kind of information in rural areas, which is why governments can step in through different information campaigns, different social media campaigns, or they can do a public outreach via people going in the rural areas and talking about it at the rural governmental level as to what insurance schemes are existent and how they can be beneficial to the farmers in subsidize in sort of transferring their risk. In context of India, as I've been speaking so far, agriculture is extremely important. It contributes about 16 to 70% of GDP still, and it employs about 44% of population. It's also a very big political topic. I mean, elections get decided based on what farmers think about, which is why governments, in addition to being responsible for securing the livelihood and the food security of the country, are also interested in from a vote bank perspective. Um, at the same time, India is also one of those countries that is extremely vulnerable to climate change. Recent data has highlighted how extreme events have become very common. For example, in 2024, there was 322 days of extreme weather events. Either it was too rainy or too hot. There were approximately 3,500 climate-related deaths, and about 4 million hectares of crops were damaged. So, which is again goes on to show the severity of the problem and also how it is extremely important for rural areas and farmers to have some form of insurance. Thankfully, India has done well in this manner. We have a pretty long history of public crop insurance program, and the seeds of it were laid out in mid to late 70s, when it was a fairly recent country in terms of having gained independence from its colonial powers. So from 70s, we have evolved and have had some sort of a crop insurance scheme, but the first sort of formally named crop insurance scheme came out in 1999, and it was known as the National Agricultural Insurance Scheme. So it was a yield based, and the indemnities were triggered by area level yield losses. It was absolutely mandatory for all farmers who were loanees, which meant that they had taken some loan in lieu of their farmland. So they were loanee farmers, and it was mandatory for them to enroll in this crop insurance scheme. It was voluntary for non-loanee farmers. So if they did not have any loans in lieu against their farmland, they did not have to enroll in it. Uh, it expanded insurance access, but it, of course, like any other indemnity yield-based insurance scheme, it faced several issues. A lot of them were administrative. For example, there were delays in claims processing because maybe there's not enough people employed, or it was very difficult to verify those claims. It suffered from weak actuarial pricing, so they could be way off in terms of what they were charging versus how many claims were filed. It sort of had a one size fits all approach, so it did not account for the regional changes in geography. Like, India has deserts as well as a big coastal line. It suffers from both drought as well as excessive rainfall and flooding. So it had a very one size fits all approach, which did not sometimes bode well for the country. And of course, it was a large fixed cost for the government, which was just about starting to become a more sort of developed country at the turn of the millennium. So it still was not a very rich country, and having a crop insurance program of this size was burdensome for the government. So these limitations prompted some policy reforms. And that kind of culminated into policy schemes. The What is now called the Pradhan Mantri Fasal Bima Yojana, which, if translated loosely translates to Prime Minister Crop Insurance Scheme. This came out in 2016. It was just a success. It's a very cut copy paste successor to the NAIS, or the original National Agricultural Insurance Scheme. It was still yield based, but the government increased their share of subsidies. They had a more technology-based yield estimation, and because of the advent of more computerized transactions in terms of claims processing, etc., it just led to faster claims settlements. And farmers had to pay lesser premiums because government was subsidizing it more heavily. At the same time, India also has a weather-based crop insurance scheme, and India is actually one of the earliest adopters of a weather-based crop insurance scheme, in which the payout is related to rainfall, temperature, humidity, so sort of weather-triggered payouts, not exactly yield-triggered payouts. The advantage of such schemes, not just in India but anywhere in the world, is that they reduce moral hazard because the payout is triggered by a certain weather-based measure. It leads to faster payouts because if the rain has not reached a certain level, there's not much investigation that needs to be done. And because of that, it has lower administrative costs because they can very easily tie the weather data with the geographical data. India is not the only one. There are many such successful schemes available across the world. For example, if those of you who are interested, Mexico till very recently had this program called Cadena. It was actually a very well administered weather-based crop insurance program. Then Kenya also has this crop insurance program that is weather-based. It's called Kilimo Salama. In Peru, there is a weather-based scheme that actually is tied to the El Nino phenomena. So based on how strong or weak El Nino effect was, they provide crop insurance to their farmers. So the research motivation for this topic comes from this coexistence of schemes, right? India has two very large public crop insurance programs simultaneously, the Pradhan Mantri Fasal Bima Yojana and the weather-based crop insurance scheme. They also have gone some, sort of some reforms over time. So in 2020, for example, a lot of participation became voluntary, and I will talk about it in later slides. So that created another fertile ground for research, in addition to having coexisting scheme, as to whether mandatory versus voluntary participation affects insurance uptake. So we can study interaction between insurance program, we can study complementarities and spillovers, we can study farmer participation decisions, and just generally overall the policy design of public insurance programs. And then it provides an insight into how government should structure agricultural risk management systems. And that's not just true for India, but the results can be extended to pretty much anywhere in the world, of course, in a more localized context of the geography that they are in. To expand a little bit, like going into the nuances of these two schemes, I already spoke a little bit, but just a few more details here. So Pradhan Mantri Fasal Bima Yojana, as I said before, is a yield-based crop insurance. So the loss assessment is based on how much the area yield was and how much was your own yield compared to the area yield. So the claims are triggered when an average yield in a block falls below a historical benchmark, which could happen because of many reasons, right? Uh, and it was implemented in 2016 Kharif. So when I say Kharif, Kharif is the monsoon season of India. So India has two crop season, Kharif and Rabi. Kharif corresponds to the monsoon season, which is sort of the rainy season, and many crops are planted because of the abundance of water. And Rabi is the winter season, which is sort of January, February, where there is no rain and the weather is colder. So India typically has two crop season, Rabi and Kharif. This Pradhan Mantri Fasal Bima Yojana, deriving from its predecessor, which was the National Agricultural Insurance Scheme, it was implemented in its current form in 2016, and it remains to this date one of the largest, if not the largest, agricultural insurance program in the world. The premium structure is such that for farmers have to pay pretty low premiums, and that was basically done to encourage uptake of insurance. So for Kharif crops, they have to pay 2%. For Rabi crops, they have to pay 1.5%. And for commercial crops, they have to pay 5%. The government subsidizes a lot of it. So the government pays the difference between what is the actuarial premium that is decided by the actuaries and what is the farmer premium. So whatever is the difference is covered by the government. Now, there is a sort of a participation scheme between this participating share between this state and the federal government. So when I say central, that is basically federal. So the cost sharing is such that federal and state governments split 50-50 of whatever is the difference between the actuarial and the farmer premium, except in the northeastern states of India, where it is 90-10. So to encourage development in the northeast states of India and to sort of tone down some of the political rhetoric in that area, the central government decided that they would bear a larger chunk of the cost as compared to the state government. The government itself does not administer these programs. It's actually administered through private insurers. So it's sort of an example of public-private partnerships. So private insurers get selected through competitive bidding, and then the entire process of claims administration, adjustment, etc., goes through private insurers in all the states. And they operate via a portal that is known as the National Crop Insurance Portal. The WBCIS, or the Weather-Based Crop Insurance Scheme, as I said, was designed to overcome the limitations of yield-based insurance, where the claims are triggered by, again, weather indicators. It is used mostly for horticultural crops, perishable crops, and those regions that have limited yield data. But they do have weather data because of the meteorological department, which provides consistent weather data across all states in the country. So operational structure again is pretty similar to the Pradhan Mantri Fasal Bima Yojana, where again it's an example of public-private partnership. They go out to to private insurance companies, goes through a bidding process, and they administer the claims. But it becomes a bit easier in the sense of claim administration because the payouts are just triggered based on an index. It's a bit, sometimes farmers are a bit unhappy about it because it is so objective and so non-judgmental that they may have suffered a loss, but because they did not meet the threshold, they do not get any relief from insurance. So that has been one of the critiques, but that is true for any index-based insurance. That's how it works. It leaves less room for judgment, which is why it is good in overcoming adverse selection and moral hazard, but it could lead to participant dissatisfaction and grievances. Now, in 2020, as I said before, there were some institutional reforms. So one of the key reforms was that the participation in Pradhan Mantri Fasal Bima Yojana became voluntary for states. So it sort of weakened this quasi-mandatory linkage to agricultural credit and loan enrollment because no longer were the loanee farmers or farmers who had loans against their property, they were not mandated to enroll in this program. They could step out of it. And the central government the federal government also capped its contribution because it was becoming a bit of a financial burden on them. As you can imagine, it led to consequences such as states altogether withdrawing from the program, and which led to a more heterogeneity in participation. Now, the thing is, it's not like the states have no insurance programs. They did come up with a state-based version of a program. Like, for example, the state of West Bengal has its own West Bengal Fasal Bima Yojana, but they withdrew themselves from the federal program. So this, again, this institutional reform creates an interesting research setup but in particular to this problem. So as far as data is concerned, we have the government has sort of very nicely collected data from 2018 to 2025. So the Yojana, the Pradhan Mantri Fasal Bima Yojana, was introduced in 2016. For first 2 years, they were not very good with data gathering. But from then onwards, they became better. And so the recent, about 2 weeks ago, they compiled the entire data for 2025. Now, there are some limitations with this data that I'll talk about, but I'll give you a big overview of what it has. So for now, it gives us a good idea about insurance participation measures. For example, it has the insured area, it has the number of insured farmers, it has the what was the gross premium paid, based for all of them. Like it has contributions from the farmer, it has contributions from the state government, and it has contributions from the federal government. It also has the sum insured and how much claims were paid. It also has demographic composition in terms of female share. So how many female farmers participated in the program in every district. And I forgot to say this data is available at the district level. So it has female participation. It has SC, ST participation. So by SC, ST stands for scheduled castes and scheduled tribes. They are these marginal communities in India that have historically been not being economically weak and also marginalized in the society. So they get certain privileges from government in sense of some reservations, etc. But in this context, it's important to see how farmers belonging to the SC/ST community are doing, which is why this data set specifically gathers that particular data. Then it has marginal farmer share, which really means how many of those are really small farmers and do not own very big farmlands. And then finally, it has the non-loany versus the loany farmer share. So how many of those farmers have loans against their farms versus how many don't? It gives us that data as well. The limitation, as I was talking about, is all this data is available at district level. So we do not have individual farmer participation data. If we had that data, it would really be a much stronger, very nice project on how to understand insurance participation behavior at an individual level. But unfortunately, we don't. We just have aggregate data at the district level. So we construct some of our own key variables in this analysis using whatever data is available to us. For all those actuaries in the seminar present today, I think you must be very familiar with them. We have, of course, the claims ratio. So total claims paid divided by the sum insured, that's the claim ratio. We have the normalized coverage. So for that, and we are still experimenting with this with a little bit for the purposes of this presentation. I put coverage, which is basically insured area divided by the district maximum insured area. So we are trying to see, like at any given point in time, what is the coverage as compared to whatever the maximum was for that particular district. We have also experimented with the log of land covered and also log of number of farmers covered, and the results are pretty consistent in all of them, maybe differing a little bit by magnitude. And then we have the subsidy share. The reason this particular variable is important because these programs were started by the government to encourage farmers to purchase insurance against their farmlands, which also means that the government promised them that it would heavily subsidize these insurance. So we want to understand how much of the uptake of insurance is affected by government subsidies. So for the purposes of this variable, we combine both the state and the central level subsidies, which is equivalent to their premium contributions. So to give you a summary statistic, Pradhan Mantri Fasal Bima Yojana, on an average for the 7 years that we have data for, it average insured farmers across districts are about 55,015. Now, it is a big number, but if you look at the population of India, and if we assume that about 17-18% of those people are engaged in farming, then it's not a very big number. So that shows that already shows some signs of weakness as far as program participation is concerned. It has a pretty decently high coverage intensity. So the normalized coverage is 0.56, which means that at any given point of time, it's about half as much insured. The coverage area is about half as much as it was at its peak. The government subsidy share is 74%, and this is an obvious finding. Also, extremely important to see that how much it is important for governments to intervene in crop insurance programs. Otherwise, they do not have very good uptakes because government subsidy is about 74%. But the claims ratio is very skewed, which again indicates some of the problems that exist with this scheme, because the mean claim ratio is 30.3, but the median is just 0.01. So again, most indemnity yield-based insurance schemes sort of suffer from this problem, and that's quite evident in this Pradhan Mantri Fasal Bima Yojana as well. On the other hand, weather-based crop insurance scheme has a smaller geographic footprint, so it has only 8,500 average insured farmers are only 8,500 in number. The coverage levels are similar, but what is most interesting to see here is that the claims ratio are lower and more stable. That is again a hallmark of a weather-based scheme because their claims process is so sort of linked to an index. There is not a lot of room for judgment, which is why the claims are stable over a period of time. The government subsidy share is lower than Pradhan Mantri Fasal Bima Yojana, but it's not that lower by a lot, only a 6% difference. So because you see the difference in the average number of insured farmers, it's quite clear that Pradhan Mantri Fasal Bima Yojana is the dominant insurance program, and the weather-based program appears to operate as a targeted complementary program. Yeah. So based on that, our main question here is that how is the coverage affected by past claims ratio of and for the purpose of understand, because we see that Pradhan Mantri Fasal Bima Yojana is the dominant program, we base our analysis mostly on that, and we try to see how much the Pradhan Mantri Fasal Bima Yojana's coverage is affected by its past claims ratio, as well as the past claims ratio of the weather-based crop insurance scheme. Then we study effects of subsidy share, and then we include some controls such as farmer composition and, of course, district and time fixed effects. For those of you who are familiar with regression, we got, this is our specification. So the rationale being that if the lagged claim ratio will sort of affect coverage in the sense that people will either learn from schemes and learn to trust it, or they will grow fatigued with the scheme and learn to not enroll in it. So it could go either way. For weather-based schemes, it's like we are trying to understand if there is a spillover between these two. Should coverage in one claims ratio from one affect the coverage in other? And then, of course, subsidy share is just to understand how important is governmental subsidy. I kept out the regression tables from the presentation, but to give you the key findings, past payouts do increase participation. So past claims ratio from Pradhan Mantri Fasal Bima Yojana does increase the coverage in next year. However, not by a lot. A 10 percentage point increase in claims only leads to about 0.4 percentage increase in coverage. So yes, there is some learning, and yes, maybe trust is building, but it is not increasing by as much. There is no spillover effect. So if you're past claims from weather-based crop insurance scheme, they are not affecting coverage in the future Pradhan Mantri Fasal Bima scheme. Subsidies strongly expand participation, and that is expected, but also reinforces how important governmental intervention is in the space of crop insurance. A 10% increase in subsidy leads to about 4% increase in coverage. So the more the subsidy, the higher the chance that coverage will increase, more farmers will enroll in the program. And there is higher participation in underserved districts, such as underserved means farm, SC/ST heavy districts, or more female farmer heavy districts, or more marginal farmer heavy districts, which is good because those are more of the marginalized communities. And if the schemes are benefiting them, then that is a pretty good thing. That is definitely an intended outcome of the insurance program. So now we try to go into this world where we look at we talk about the reforms that happened in 2020, when for a lot of states when it became mandatory for states to participate in this program, and also it became mandatory. It did not remain mandatory for states to participate in this program, and it also did not remain mandatory for loany farmers to participate in this program. So, to a great extent, this participation in Pradhan Mantri Fasal Bima Yojana became a voluntary exercise. Now, there is a lot of experimental work that shows the behavioral effects of agricultural insurance, and which when they depend critically on whether participation is voluntary. If the participation is involuntary, then it's quite possible that if the participation is voluntary, it's quite possible that the past does not affect the future as much. So we'll look into that. It matters to our setup because our data is at the district level. So we do not observe individual take-up decisions, but still, we believe that after 2020, average coverage will still more likely reflect farmer willingness to enroll, state government subsidies and subsidy burdens, and administrative feasibility. So we are hoping that the aggregate reflects individual decisions. It's not a very unreasonable assumption to make, and given our lack of access to individual decisions data, this is a good enough proxy to have. So what we try to answer in this sort of complicated looking regression specification is whether past realized payouts become more or less informative for subsequent Pradhan Mantri Fasal Bima Yojana coverage once participation becomes more voluntary. So we sort of have this interaction between claims ratio and post 2020 for both Pradhan Mantri Fasal Bima Yojana and weather-based crop insurance scheme. We also keep subsidy shares because that still remain important. It's not like the subsidies went away or changed much. And we also have our usual controls of, composition and district and time fixed effects. What we find is that past payouts increase more strongly before 2020. So a 10 percentage point increase in claims, it leads to about a 0.77% increase in normalized coverage before 2020. But after 2020, this relationship weakens sharply. So what this means is that once participation becomes more voluntary, higher past claims no longer increase future coverage. At the same time, there is no spillovers from weather-based crop insurance schemes. So there is very limited, the lagged ratio of weather-based crop insurance claim is not significant. Subsidies are still very important. A 10 percentage point increase in subsidy leads to a 4% increase in normalized coverage. So again, it shows we are pretty much clear that, once voluntary participation is in effect, higher past claims no longer increase future coverage. This could be due to many reasons. If it's they may not be happy about the scheme, right? It goes through a lot of issues and they just feel like it's not good enough for them. Or if it has become voluntary, then information dissemination has also weakened, so less people are aware about these schemes, or they just don't have the financial capacity and they were doing it just because it was mandatory. Once it became voluntary, they just stop participation in any such schemes. Next, we try to understand the dynamics of learning versus fatigue. And also how experience accumulate over time. So we argue that insurance participation may respond not only to recent payouts, but also to accumulated experience over time. And there are two sort of conflicting mechanisms at play here. There is a learning mechanism. So if repeated payouts are happen, then that may strengthen your belief that insurance is providing protection, which means that it will lead to a sustained or expanding participation. On the other hand, it could go completely opposite. Maybe you just are extremely unhappy about it because there is administrative complexities, there is some basis risk, there is some delay in claim settlement. So you may feel, no, this is not for me. But these things can be better learned by looking at accumulated experience rather than just 1 year previous experience. So learning mechanism would lead to an increase in participation, but fatigue mechanism would lead to a reduction in participation. So to sort of conceptualize this, we hypothesize whether insurance participation reflect long-term learning from payouts or fatigue from repeated program exposure. For this, we come up with this variable known as cumulative claim ratio. So we just aggregate the claim ratio over past how many years the program has existed for both Pradhan Mantri Fasal Bima Yojana and weather-based crop insurance scheme. We also have similar as before, subsidy share and the usual control variables. And here is what we find, which is, what we would not have not hoped for. We hoped that people would adopt more schemes to protect themselves, but it turns out that evidence of fatigue is more stronger than evidence of learning, or really there is not that much evidence of learning, basically. So district with repeatedly large Pradhan Mantri Fasal Bima Yojana payouts experience declining subsequent coverage. So it turns out that people don't like the scheme as much as government or I as a insurance person would have hoped for. There is some evidence of cross learning here. So district with repeated weather-based crop insurance payouts subsequently expand Pradhan Mantri Fasal Bima Yojana coverage. So in the previous two specifications, we had no spillover effects whatsoever. Learning was very limited to the scheme that we were looking at. But this is the first evidence of a spillover effect where we see that if there is a repeated weather-based crop insurance scheme payout, then farmers are more likely to enroll themselves in the Pradhan Mantri Fasal Bima Yojana coverage. So this could be due to many reasons. It could be due to all that is happening could be due to many reasons. One of them could just be the institutional differences. Weather-based crop insurance scheme is, as we know, it's index-based and it leads to it's triggered by indices. There is not a lot of conflict between the claims adjuster and the person filing for claims, so the payouts are complex. Pradhan Mantri Fasal Bima Yojana is more indemnity based, so there is a lot of administrative complexity. And because of that, maybe people just don't want to deal with the governments as much as they would like. They would just want to avoid dealing with sort of these institutions where they keep having to, go to them again and again and keep fighting for their claims. So it just that they are fatigued by the institutional ineffectiveness of all of it. Now we still have some more work to do. So we have to investigate basis risk because we have two competing programs. We have to empirically measure payout misalignment and then assess whether index insurance coverage responds to improvements in payout accuracy, and whether sort of having one leads to is there any sort of moral hazard going on between the two. And then we also have to correlate this with climatic events. So one of the measures that I thought about was using this CHIRPS data that is maintained by the University of California at Santa Barbara. They have a drought they have drought measures. So we can measure drought and then see we have district level drought data, and then we can see how that is going to affect insurance uptake in the next few years. So for example, if there is a drought this year, is that going to increase participation in insurance next year? Now, in a voluntary world, that may or may not hold, because if there is a drought this year, but you know that you should have insurance for next year because there's higher chances that you may still be distressed, that the climate still may be bad and you will still be financially distressed. At the same time, if you suffered a drought this year, it's also quite possible that you do not have enough financial resources to buy insurance for next year because you just took a lot of financial hit because of drought and your crop not working out. It could be different in a mandatory world where maybe governments can force people to sort of have these insurance, but now we are in a voluntary world, so the behavior would be governed by the voluntary nature of the insurance. So these are the questions that we have in mind that we need to still discover, that we need to still sort of investigate, but we haven't gotten there yet. So to sort of summarize this sort of longish presentation on these two um, insurance schemes, what we saw and learned from our first specification was that districts experiencing higher Pradhan Mantri Fasal Bima Yojana payouts expand insurance coverage in subsequent years. However, it needs to be sort of kept in mind that it's not a lot. For a 10% increase in claims ratio, there is only about 0.4% increase in coverage, which, given the size of the population and the size of agricultural lands in the country, is not that much. So there is some learning, but not as much as there should be, given the seriousness of this sector and situation. Institutional reforms change participation dynamics. So, when it became more voluntary for states to participate after 2020, the relationship between past payouts and coverage weakens substantially. So that could be fatigue from the system and just being unhappy about coverage and claims overall. And so finally, when we look at long-term run dynamics, we discover something interesting. Firstly, repeated Pradhan Mantri Fasal Bima Yojana payouts are associated with declining coverage over time, which is very consistent with our result from institutional reforms. So fatigue is sort of setting in, and dissatisfaction with governmental institutions is also setting in. However, this is also where we see the first evidence of cross-participation or cross-scheme spillover effects, where cumulative payouts under the index-based scheme lead to higher participation in the yield or the indemnity-based scheme. So successful experiences with one program can trigger trigger interest and increase trust in another. But what is critical to note here is that weather-based scheme is index-based, so people are generally more satisfied with it. And Pradhan Mantri Fasal Bima scheme is indemnity-based, so that will not lead to as much satisfaction. So we still have to investigate what happens with the other way around, whether whether good experience with Pradhan Mantri Fasal Bima scheme, does that lead to more participation in weather-based crop insurance scheme? My guess is no, because nobody, people are generally not happy with Pradhan Mantri Fasal Bima Yojana, so it's not, experiences will not inspire them to take weather-based crop insurance scheme. So that's it. I'm happy to answer all your questions, and also very happy to get some feedback. If you have any ideas that I should be pursuing for this particular research topic, I would be very happy to hear that.
Everyone, please feel free to unmute yourself, raise your hand, or put any of your questions or comments in the chat. All right. If there are no questions, thank you so much for joining today, and thank you so much, Prerna, for delivering such an insightful
Hello.
session to learn. Oh, Dominic, please go ahead if you have a question.
Yes, I do. Unfortunately, I couldn't join throughout, but I think I got one or two questions. Please, can you go to
Mm-hmm.
page six of your slide?
Mm-hmm. Now, let me see. Yeah.
Oh, okay, yeah. So the question I was wondering is, India being one of the largest adopters of weather-based or weather index
Mhm.
insurance, how is the basis risk solved in terms of the difference between or the confusion around the loss and then the payout, the differences, because the case can be that, okay, you actually put some kind of a particular weather instrument device on the field. Insurance company is saying that, okay, this is what was recorded. The
Mhm.
farmers are also thinking that that is not realistically what was, I mean, observed in terms of, okay, we observed this amount of rain, and farmers are saying that, okay, that is not what we observed. In that
Mhm.
case, I think there's going to be a difference between the loss as compared to how much we pay out as insurance. How is this particular difference resolved on the field?
Uh, I I don't have a good answer to your question because I need to look into carefully about the conflict resolution, so to speak, and how it is administered. But what you are saying is actually very evident in the participation, right? Like, uh, because there is some dissatisfaction with how these schemes are being administered. That is why people are complaining about their ineffectiveness and not enrolling as much as the government would like. As to conflict resolution, I think I'll have to go back and check the government documents, how they are doing it.
Okay, okay. And one
Yeah.
thing also asks is that in terms of monitoring, especially
Mhm.
with the yield index, I
Yeah.
think India is one of the pace setters in this. So maybe is there any particular sort of evidence on some monitoring schemes that maybe we can learn from that currently they are using to resolve these particular, I mean, confusions in terms of monitoring
Yeah.
some sort of
Again,
adversarial?
it again goes back to the same thing. They have contracted it out to the local sort of insurance companies to do the monitoring as far as yields, etc., is concerned. As you can see, because of low participation, there is still a lot of dissatisfaction with how this is happening. So they usually the government by itself is not engaging so much in monitoring. They are basically going it via the private insurance company, so to speak. Yeah.
Okay, thank you.
Thanks. Thanks for the questions. I think what your question shows is that I need to talk a little bit more about how the administrative side of this functions.
Okay, all right.
Thank you for your questions, Dominic. Do we have any other questions?
Yes, okay. Since no question is coming, let me ask you this. I think I saw it. You mentioned of a spillover effect in your presentation. What was there anything like that? Uh,
Yeah, at the last one, there is a spillover. So there is no spillover effect in the short run. That is the Uh, that's the first regression, so to speak. We don't see any effect of claims ratio from WBCIS on the coverage in the PMFYB. But when we look at cumulative claims over a period of time, then we start noticing some spillover effects. So if you have had a positive experience with the weather-based crop insurance scheme, you are slightly more likely to take up on the indemnity-based or the yield-based insurance, basically.
oh, okay. Oh, okay. Okay. All right.
Yeah.
Thank you.
Yeah.
Awesome. Any more questions? All right. If not, again, thank you once again for joining today, everyone. It was truly valuable, Prerna, and I'm confident all of our participants took away a lot from your expertise. We really appreciate you taking the time to be with us and to share your work. Thank you for being a part of today's event. We very much look forward to welcoming you back for more events.
Thank you so much. Thank you for the invite and thank you for your questions, Dominic. I'll go back and check into some of those details again. And once again, thank you for the invite. Very happy to be here and would be very happy to come back as well next year.
Awesome. Perfect. Thank you, everyone. Have a great rest.